Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 4:45 PM on Friday the 12th of February 2021 and we're going to spend the next few minutes looking at the S&P 500, specifically our proxy, the SPY. Now before we go into our basic technical analysis and Elliott wave analysis as we always do, I just want to share with you a different chart before we dig into this one. Now recently I've been getting asked by more people that with the market up at all-time highs and everything seemingly bullish forever, why it is I can still have a generally bearish bias. So I'm going to try and explain that to you now using a different chart. So let's just move over and have a look at this thing here. This is called the PCC, put the call ratio for the Chicago Board of Options Exchange, the CBOE. And essentially, I set this up as simply as possible so everyone can see it and understand it. It's really simple to understand, guys. Essentially, this is a ratio between bullish bets in the options market and bearish bets, alright? Puts and calls. Now, when this ratio gets lower, there are more calls and less puts. When this ratio gets higher, there are more puts and less calls, hence the put to call ratio. Now, I've basically just drawn out two lines here, a red line and a green line. Basically joining together this high, these highs, this high. This is going to represent our extreme fear / panic line. And then a bunch of lows here, lows here, lows here, lows here, a low here, low roughly in this territory, you know, averaging it out. And here's our red line. This represents extreme greed and stupidity. Complacency. So the red line represents when people are uber bullish. When we go to these extremes, people are uber bullish. There are a maximum number of calls to the fewest number of puts. When we come to the green line, there is the maximum fear in the market, the absolute maximum of puts to calls, bearish bets to bullish bets. Now, I just want to point something out to you. Let's take this low here, okay? This low on its way to the extreme greed and complacency line. This represents the bullish conditions as we're coming towards this line prior to the Corona meltdown, okay, in February 21. In February 20. And then we have this fear reaction. Now, let's put it really simply. If you lightened up on stocks when we got this warning of the put to call ratio heading towards extreme greed and complacency, you would have avoided the annihilation of that 30% crash. If you brought the market at the peak of fear, then you would have benefited from the huge rally since. So the old man got it right. Okay? Be fearful when others are greedy, and be greedy when others are fearful. Now, if you're talking to a bull at the moment who's buying the stock market at all-time highs, he's going to say Warren Buffett kind of stuff occasionally and think he's clever and talk about all of these fundamental reasons why the market's going to the moon forever. Alright? And that's all he's going to have for you. But let me just point something out on the chart here. This chart goes back to 2018, 16, 15, 10, 2008, the GFC. Look at this. New lows. I should say new lows. It said new low. We've reached levels of bullish stupidity which we have never witnessed before. Now, here's another example. Here's the extreme, when we reach the extreme complacency line, or very close to it, in January of 18. What happened next, guys? Market crashed. Fell 12%. Right? Boom. What would have happened if you'd brought it? Once you reached extreme fear conditions, you'd have benefited from the interceding rally which led us all the way up to the Corona peak. What if you'd sold there? You'd have benefited here. What if you'd brought here? You'd have benefited here. In other words, the old man, like I said, the old man got it right. Okay? Look at where we are now. Look at where we are now. We are at levels of stupidity never witnessed in the history of our species. Alright? Or at least since recorded data can show us. I don't know, maybe the tulip bubble looked like this. Maybe, who knows. But If there had been an options market back then, maybe it would have looked something like this. I don't know. 1929 would have probably looked something like this. But this is the result of retail showing up in force and speculating with free money in the market, thinking they're clever, thinking they're going to make a killing. They don't, they won't, they'll get crushed. Because that is life. That is the pattern. Okay, the guys who get in first out of those retail guys, just like we saw with GameStop recently, they'll do fine, they'll get out. But then, they're the Wall Street equivalent just in the retail market. It's the suckers who buy it at the wrong time that get fucked. And the exact same's happening right now, in my opinion. Now, like I said, read the disclaimer. This is not financial or trading advice. This is me expressing my opinion. People have asked me, how can I be bearish under such circumstances? Because I am witnessing a bias never seen before, at extremes never seen before. So what do I expect to happen next? That's why I'm overall bearish. Okay, so that's enough of that. There are technical explanations for the fundamental arguments which already exist. Don't listen to them. Just look at the data. That's all I'm going to do. That's all I'm interested in doing. So anyway, that's why I can still be bearish under these circumstances. The market's seeking new highs, but it's reaching them under a bias of bullishness we've never seen before. Crazy times. Crazy, crazy times. Alright, so that's that little rant over with. Sorry if if that's upset you in any way, but I just had to get it off my chest. So we're going to come over now, we're going to look at the SPY, we're going to do our usual basic analysis first, basic technical analysis first, Elliott wave analysis second. So let's clear the chart and see what we can see. So we're on a weekly time frame. I'm going to zoom into recent price action up here. Okay, so a quick rundown of the chart. Volume profile on our right hand side here, which is all the yellow and blue, with the yellow dashed line representing our point of control. This is a visible range and therefore adjusts when we adjust the chart. We have 4 exponential moving averages on the chart. 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD here with a 10 for the short term moving average, 20 for the long, and a 9 to smooth. What can we see here basic technical analysis wise? Well, a bit of an indifferent week so far. We are still trading and we've still got the rest of Friday to trade through. We are live at the moment, so we could break higher today. That's a possibility. I do think that is a possibility. But it's been a bit of a flat week after a very bullish week last week. We're still above the 10, 20, 60 and 250, having tested the 10 3 times in the last 6 weeks. RSI on the weekly time frame here, we can see below the overbought level, below the 70. Some lower highs here going on while we've got higher highs. We call that bearish divergence. This creeps up constantly at the moment throughout the whole of 2020 and onwards. And we've got the MACD here with a couple of green bars on the histogram for the last couple of weeks. As you can see here, bright green bars, a little return to bullish momentum. With the short-term moving average moving away from a longer-term moving average, crossing over, then bouncing higher. Not uber bullish, but definitely not bearish, so supporting another move higher. Both are supporting another move higher. Series of higher lows in the RSI as well over the long term, and the low and higher low here. So although we've got bearish momentum building at the top here, there's still some pressure left potentially to push us higher. So let's come down to the daytime frame and see what we can see. Above the 10, 20, 60, 250, no surprise there. Quite a bullish candle forming for today actually. This will support my count and I'm going to show you later. Bearish divergence also here, we can see on the RSI, no surprise there. High, lower high, lower high, high, higher high, higher high, and so on and so forth. Right, let's all slow down in bullish momentum here on the daytime frame on the MACD. Little rolling over, but that could just be temporary before we make another push. We're still below the overbought level, could come back a little higher. Right, so that's basically basic technical analysis out of the way. Let's have a look at the count. So, we've got 2 big fib channels going on here. We've got our long-term fib channel, which if we come all the way out to the week chart for a moment, and I just alter the chart, you can see how this is our cyclical wave 1, cyclical wave 3, predicting our cyclical wave 5. 1 to 3 to 5, okay? So let's just zoom all the way in. And that's the outer blue line here. We're also trading on the intermediate time frame fib channel here. We're going to come down to the 2 hour, we're going to alter the chart, we're going to get rid of the RSI, and we're going to zoom and have a quick look at things going on here. Now, this is what I think is happening. We've been trading up inside of this fib channel, wave 1, and then minor 1, 2, and then minute 1, 2, 3, 4, 5 into minor 3, minor 4, minor 5, intermediate 3, intermediate 4, top to bottom of the channel. Always like to see that with a peak of momentum in the 3 of the 3, and then now pushing up to the 5. Now we've come back to the top of the channel and we've sold off a bit, right? Sold off a bit and put in a kind of sideways movement since. So you could argue that we've done enough to say this is a 5 that we've done. Right, so let's just come down to 15 minute for a minute and have a closer look. I suspect, however, we have one more move higher. I suspect one more move higher in a fifth wave, and and the reason I suspect that is because I think we're coming up to test the long-term channel, the long-term trend channel, the fib channel, because we found the wave, we got the wave 1 at the start of the bull market, we found the wave 3, now we're trying to find the wave 5, cyclical wave 5. Excuse me for one moment. So I think that we got that one little last push to get to the top of this fib channel, and that would have a better relationship with our wave 5 intermediate time frame limit we've got up here at 403.83. 403.83, right? That's why our intermediate time frame is calling for our wave 5 limit. Why is that? Because the 3 on the intermediate time frame was shorter than the 1, and therefore the 5 can't be longer than the 3, and so on and so forth. Right, so in that regard, we should be seeing a flat pattern play out here for our wave 4, and then a 1, 2, 3, 4, 5, or whatever it is, going up higher. If you want to be bearish here, then essentially you can only be bearish until we breach the high here, back at 392.23, the height of the 3, right? Because in order to be bearish, yeah, you got to think that this was 5 wave down impulse, and this is a B, C, and now we're going to do a 3, 4, 5, right? And we're going to go down lower. So if you wanted to be bearish, just saying, I'm telling you to be, but if you wanted to be, you're pretty close to the top of that 3 right now. Here's current price, 391.23. We're trading live at the moment. 392.29 would be the top. If you were to short it from here with your stop just beyond the top, just to be absolutely safe, that's about as safe a short as you're going to get. Because if we're going to turn down from here now, and the count could support that, that would be a good position. However, that's not what I think is happening. I think we're going to push higher. So, yeah, so let's just hide that for the moment. Let's just get that off the chart. Now let's come down really small and have a look at the detail for these two counts on an even smaller time frame. Let's come down to the 5 minute, okay? So, how would you count this if you wanted to be bearish, right? You'd have to make this to be an impulse wave. Now, it sure as shit looks like one. Okay, I'm not going to argue with you there. You've come to the top, you've broken this fib channel. You've got 1, 2, 3, 4, 5, and then you've got this huge A, huge B, and 5 waves in a C. La-di-da, done. There's your 2, off to hell we go. Right, that's what you're going to have to believe if you want to be bearish. And like I said, trade setup is about as cozy as it's going to get. Okay, with such a small margin to play with. You know, I might take this trade if the count, if he starts to roll over, I might take that trade today. But the problem I've got is the count up until this point on the smaller time frame doesn't conclude here on the 5th. It concludes on the minor 3. Because if I try to force the minor 3 in earlier, all the disparity of the wavelengths gets screwed up, and I don't like the look of it. So I'm going to count this as an AB, an A, excuse me, B, C to here, flat pattern, and this is a 1, 2, and now we're running up higher. Okay, could be wrong. I suspect that's what's going to happen. Could be wrong. We could be bearish, but look how deep this correction is, guys. Already, you know, that's putting me off. Okay, if that was a wave 1 down, we've already retraced 78.6. We've almost retraced 90 already, and we're on our way back to it. That's a very, very deep retracement. Not saying it can't happen. You know, like I said, it's the safest form of retracement if you wanted to trade it. It's that deep. But yeah, that is basically, to me, looking like a flat pattern, and this is looking impulsive so far. So I'm going to stick with the idea that it's impulsive. We've got to wait a little bit longer. If you're in the bear camp and you believe what I believe, that we're heading towards the top and that we've got the extremes of the options market to support it, extreme conditions, and we've got a count which supports it, then that's what I'm really waiting for. Okay, so that's really it, guys, for the S&P 500 for this week. I've got a couple of other videos I want to get out this weekend. I think I'm going to cover Tesla. I've set up the chart for that. I'm going to try and get that out later today, and maybe one more after that for the weekend. So all the best, guys, and if you're new to the channel and you like what you've seen here on the channel at Green Star Trading, please subscribe, smash the like, leave us a comment, let us know what you think below. And that's it, guys. All the best, take care, I'll be back with you shortly. Bye bye.